All right, legends, welcome back. Okay, so in this video, we're going to talk about things that are tax deductible, as well as learn some tips and tricks that'll help us save money at the end of each quarterly period. That's my first tip. Pay taxes quarterly. Don't do it annually. If you do it quarterly, you'll have a better handle on your loose end receipts. You don't have to carry your receipts around for a whole year, and you'll do taxes 4 times as much, which means you'll have more experience and better handle on your taxes. So what I'm going to do is go to my transactions. I'm going to look at my banking because I need to file some of these away as expenses, which are tax deductible. Shell gas. Oh, and I'll send a link to this. There should be a link right around here if you want to sync up your credit card with your transactions, yada, yada. Shell gas station. Yeah, this is a travel expense. Let's just click on this drop-down menu and look at the list of expenses and talk about a couple of examples for the more important ones. From the top, obviously Shell gas is not an advertising expense. Advertising expense, businesses pretty much always have this, whether it's a t-shirt, a hat, a sticker, ad placement, car decal, as well as intangible things like Google AdWords or Yelp.com or the Yellow newspaper. What was it called? Yellow Book. Pay for ads, stuff like that. That all goes down as advertising. One thing I learned about 6 months ago is that initials and acronyms count as advertising expense. You can write off, so say, here's my hat, San Diego Padres hat, last place every year. I put VPS on it. Well, my name is CH. Village Park Source is my business, my DBA. So right here, if I put an acronym on my hat or my t-shirt, it's tax deductible. So keep in mind that acronyms and initials are tax deductible. Say your name is JP Morgan and you put JPM on your t-shirts, well, that's tax deductible and you can save money that ways. Okay, what happened to our advertising? Bad debts, no, not really common for sole proprietor. Bank charges, this is not ATM fees. What this is so some banks will charge you like $15 a month if you don't have a minimum balance in there of maybe $5,000 or $7,500 or $10,000. Well, that $15 that they charge you each month, yes it is, it's tax deductible. So keep in mind of that. Just forget this whole Shell thing. I keep looking at this Shell at the top. Commissions and fees, not relevant for small businesses. Disposable fees. Dues and subscriptions. Dues and subscriptions, some companies pay monthly for things like Adobe Creative Cloud. For example, I'm paying for Quickbooks Online. This is like 10 or 12 bucks a month. Some companies pay for lynda.com. Some companies just buy Rolling Stone magazines to put in their lobbies. So this would fall under dues and subscriptions. You could also probably categorize this as just office supplies. At the end of the day, your tax accountant is just going to look at your expenses. It's really up to you just to categorize it and make their life easier. They're going to look at your expenses and they're going to look at your income. Insurance, probably the biggest one. Insurance is tax deductible. You can deduct your spouse and your dependents, aka your children. Insurance is tricky because a lot of people that work for companies, W-2 employees, their company matches their insurance. Sometimes it's not that good of insurance. Sometimes if they, I don't know, have diabetes or asthma or something like that, their companies won't insure them and stuff like that. As a sole proprietor, you have more control over. You get to pick your insurance out, and again, it's tax deductible. Probably the biggest break of being a sole proprietor in terms of taxes is probably your health insurance. Again, if you have 3, 4, 5 kids, this is where it really counts. I've got people that I know that work construction that just can't afford to have anything outside of health. I mean, they can't have dental or visual, and their company won't cover it. They've got too many kids, yada, yada. Pay your health insurance. It is tax deductible. Job materials, self-explanatory. If you buy stuff at Home Depot or Lowe's or Hub, keep a track on it. It's tax deductible. Meals, entertainment, this is a big one. I meet clients over coffee, lunch, and dinner all of the time. I always flip the bill. It's all tax deductible. On a bigger scale, larger companies buy things like box offices to football, baseball, and concerts to impress clients. My best advice is to hold on to the receipts after you're done paying the bill. The receipt, not the merchant copy, hold on to the customer copy. Write the name of the person you had dinner with and their business on each receipt. Office expenses, self-explanatory. Staples, Target, computers, Mac, PC, whatever you buy, obviously tax deductible. It's pretty uncommon that any business nowadays does not have a bunch of office expenses at the top of their deduction list. QuickBooks payment fees, that probably could have gone under dues and subscriptions or office expenses. Rent and lease, this one's tricky. A lot of people, the IRS really wants to distinguish where you live from where you work. So if you have your office, you're running out of a garage, or you're running out of your master bedroom and you have a bed in there, you might get audited. Chances are you're not, but if you do, you could get busted by the IRS in that. What I try to do is, so I've got a 2-bedroom in my house. I write one check, obviously one check to the homeowners association to live here, but I write it in 2 checks. I write one sum of $1,600. But $800 of that, because I have an office in the 2nd bedroom, I write from my business account, and then $800 I write from my personal account. So just distinguish where you sleep from where you work, and shouldn't have a problem with that. Repair and maintenance is huge. I need to drive a car to meet with clients. I write off everything: clutches, oil changes, brakes. Anything that your car or cars requires for maintenance is tax deductible. Shipping and delivery expense. I sell a service, not a product. Supplies, tools, travel. Travel, this is gas. This is the big one. Your accountant's going to tell you to get into your car and log down every time you drive to meet a client or anything that's work related, and jot it down on a pen and paper. The reality of this is it's borderline impossible. What I do is I just use my iCalendar, and every time I meet with a client, I met with a client this morning, Jim's Fireplaces. I rode 22 miles. I just write down like an approximate of what I drove, and at the end of the year, I add this up. So just write it down on a calendar. Preferably iCalendar works for me. Yeah. Miscellaneous. Okay, so one of the biggest things that I write off, that again is something I learned recently, is that my student loan interest is tax deductible, not the principal amount. Say you owe $275 a month in student loans, excuse me. Well, $250 of that is probably the principal amount. You're probably paying anywhere from $20 to $25 a month in interest. At the end of the year, when you're done paying your student loans, whatever it's Sally Mae or if it's just whoever, they're going to send you what you paid in interest. Hold on to that. Bring it to your accountant because it's tax deductible. Negatives of self-employment sole proprietor taxes is that you need to pay Social Security and Medicare in full. I'm sorry, I think it's like 13 to 15%. So if you're a W-2 employee, aka you work for a company, they match it. It's like 7% you pay and 7% they pay. But if you're a sole proprietor, you have to pay for all that. It's anywhere from like 13 to 15%. I don't really remember off the top of my head. That's really the only negative to doing your own taxes and running your own small sole proprietor business. Other than that, you have way more control over your taxes than a W-2 employee would. If you do it right, you can write off everything. I would put 30% of your taxes aside, 30% of your income aside. If you put 30% of your income aside, you'll never really owe at the end of each quarterly period, and you'll have a pretty good refund at the quarter if you do your taxes correctly. Another tip that I'd recommend is never pay with cash for expenses. It's easier to track expenses with a credit card and or debit card. Also, QuickBooks does log in all of our expenses and income just like this, but this isn't sufficient for tax deductible. You're going to have to hold on to the hard copy of each receipt. So that means I have a shoebox full of receipts, and at the end of each quarter, I've got to categorize them to make life easier for my CPA, my accountant. If there's anything else that I'm forgetting. Oh yeah, when you find a CPA, find one that's about $40 to $50 an hour. Don't let somebody charge you $1,000 to do your taxes. There's 1,000 CPAs out there. There's 1,000 new graduates that are 22 that don't really know their salary or what the other people are getting. That they're educated in this. They know what they're doing. You should be able to pay your taxes each quarter for less than $300. You're paying $1,200 in taxes a year, and each time you pay taxes, it's tax deductible for the next time you pay taxes. Good luck with this. If you guys have any questions, hopefully you learned a thing or two. Maybe see you guys in the next video when we talk about vendors. All right.